Are you familiar with the term conversion cost in accounting? If you're a business owner or manager, especially in manufacturing, this is a concept you definitely need to wrap your head around. Conversion cost refers to the expenses incurred during the manufacturing process, specifically the costs required to convert raw materials into finished products. Understanding this concept can empower you to optimize your production process and make informed financial decisions that can significantly affect your bottom line. So, what exactly makes up conversion cost? It's primarily two components: direct labor and overhead. Direct labor includes the wages and benefits paid to employees who are directly involved in production. Think of the workers assembling parts or operating machinery. On the flip side, overhead encompasses all those indirect costs that are essential for manufacturing but can't be traced directly to a specific product. This includes rent for your manufacturing facility, utilities, equipment maintenance, and even insurance. When you combine these two components, you get the total conversion cost, which is crucial for determining the total product cost. Now, why is this important? Well, let's dive into the heart of it. First off, conversion cost is a significant factor in setting your pricing decisions. You must ensure that your selling price covers all costs incurred during production, including conversion costs, to make a profit. If you don't know your conversion costs, you risk underpricing your product, which can lead to financial losses. But it doesn't stop there. Understanding your conversion costs is essential for profitability analysis. By calculating the total cost of production, including conversion costs, you can determine your profit margins. This information is critical for assessing your business's financial health and making informed decisions for future growth. It can help you identify whether your business model is sustainable or if you need to pivot. Let's not forget about process improvements. High conversion costs can signal inefficiencies in your production process. By analyzing these costs, you can identify areas where you can streamline operations, reduce waste, and ultimately improve the quality of your finished products. This isn't just about cutting corners. It's about making your business more efficient and effective. And here's another angle: competitive advantage. If you understand your conversion costs well, you can offer your products at a lower cost than your competitors. This can help you attract more customers and increase your market share, leading to greater revenue and profitability. In today's competitive landscape, every edge counts. Effective cash flow management is another reason to keep a close eye on conversion costs. Knowing your total production costs allows you to forecast expenses accurately, helping you avoid cash flow problems. This foresight is crucial for ensuring that your business can cover its expenses and continue operating smoothly. When it comes to budgeting and planning, conversion costs are essential. By understanding these costs, you can set realistic revenue, profit, and expense targets, keeping your business on track to meet its goals. This strategic planning is vital for long-term success. Now, let's talk about the advantages and disadvantages of focusing on conversion costs. On the positive side, knowing your conversion costs helps in pricing decisions, improves profitability, identifies cost reduction opportunities, provides a competitive advantage, and aids in cash flow management. However, it's not all sunshine and rainbows. Conversion costs only represent a portion of the total production costs. They don't include marketing, research, and development, or administrative expenses, which means they might not give you the full picture. Moreover, focusing too heavily on conversion costs can lead to short-term thinking. You might prioritize immediate cost-cutting measures over long-term investments that could benefit your business in the future. Balance is key. Let's break down the components of conversion costs a bit more. We've got direct labor, which is pretty straightforward: wages, salaries, and benefits for workers directly involved in production. Then there's overhead, which can be trickier. This includes indirect costs that support production, but can't be directly tied to a specific product. Think rent, utilities, maintenance, and even things like cleaning supplies. To calculate conversion costs, you simply add direct labor costs to manufacturing overhead costs. The formula looks like this: Conversion cost equals direct labor cost plus manufacturing overhead costs. It's that simple. Let's say you produce 1,000 units of a product, and your direct labor cost per unit is $5, while your manufacturing overhead cost per unit is $3. Your conversion cost per unit would be $8, leading to a total conversion cost of $8,000 for the month. Now, if you want to make a profit, you need to set a selling price that covers this conversion cost. If you want a 20% profit margin, you would need to sell each unit for $9.68. If you can't sell at that price, it's time to look for ways to reduce your conversion costs or improve efficiency. Let's compare conversion costs to another important concept: prime costs. Prime costs include all direct expenses, raw materials, and direct labor, while conversion costs only account for direct labor and manufacturing overhead. In essence, prime costs give you a broader view of all costs involved in manufacturing, while conversion costs focus specifically on the process of turning raw materials into finished goods. Speaking of reducing conversion costs, there are several strategies you can implement. Automation is a big one. By automating processes, you can reduce direct labor needs and increase production efficiency. Lean manufacturing is another approach that focuses on eliminating waste and improving process efficiency. Improving workforce productivity through training and clear expectations can also help. Reducing energy consumption and material waste are additional strategies that can lead to significant cost savings. Now, let's consider how automation affects conversion costs. Automation can reduce labor costs and increase productivity, making your production processes more efficient. It can also improve accuracy, reduce material waste, and enhance workplace safety. However, it's essential to weigh the initial investment in automation against the long-term savings it can provide. Depreciation is another factor that can impact conversion costs. As machinery and equipment depreciate, their value decreases, which can affect your manufacturing overhead costs. If your equipment becomes less efficient over time, it could lead to higher conversion costs due to increased maintenance and lower production capacity. Outsourcing can also play a role in conversion costs. By outsourcing production to regions with lower labor costs, you can reduce direct labor expenses. However, keep in mind that this can also introduce challenges, such as increased transportation costs and potential quality control issues. The use of technology in accounting has revolutionized how we manage conversion costs. Technology increases efficiency, improves accuracy, and allows for better data analysis. It also facilitates accurate forecasting and enhances communication between different departments. With the right technology in place, tracking and reporting conversion costs becomes a much more manageable task. Now, if you want to accurately track and report conversion costs, there are several best practices to follow. Implementing an integrated accounting system can help capture all relevant data in real time. Utilizing cost accounting methods, assigning direct and indirect costs properly, and using standard costing are all effective strategies. Regular audits are also essential for identifying inaccuracies and uncovering opportunities for improvement. By staying on top of your conversion costs, you can make informed decisions that will drive your business forward. In conclusion, conversion cost is a vital aspect of accounting that significantly impacts your business's bottom line. By understanding its components, calculation methods, and strategies for reduction, you can make informed decisions that keep your business competitive and profitable. The world of manufacturing is complex, but with the right knowledge and tools, you can navigate it successfully. So, take the time to dive into your conversion costs, and you'll be well on your way to optimizing your production processes and enhancing your financial health.